G'day guys, Sam here from TradeToProspa to give you another market review. For those who have been following me, I'll be repeating some of the stuff in the past to recapture what we've talked about, as well as continue on to see what the progress is. Many believe this is a good buying opportunity with fear in the market. and thinking this is the bottom and it's the dip. However, that's a high risk move, and I'll explain why. So let's start with the SP 500 and look at the history perspective. From a historical perspective, we'll find out why this is a high risk move. Let's just go with the weekly and then look at some fractals, look at historical data that gives us an understanding as to what's taking place. So from this weekly structure, I've made a few comparisons, and pretty much that's the 2008 mortgage crisis. We've seen this 200 moving weekly average being the support, and once we lost it, we did go down a fair bit. And right now we're on the 200 weekly moving support as well. What you can see from this episode, from the 2000 or the COVID event, we had a massive capitulation and a lot of money, US dollars, printed to give this bubble. So hence why we got this inflation, because pretty much if you look at any of the YouTube reports, inflation is based on money supply, and money supply has been printed in the last 2 years more than ever in its whole entire history, more than close to half. So this is artificial pump, and the consequences are basically based on the inflation and how the Fed is going to handle it. So a lot of this, if the Fed decides to continue to do high interest rates as a means of controlling inflation, doesn't make sense. And also unemployment needs to rise to reduce inflation because they want to kill demand. Killing demand should bring stocks down. However, looking at that's our big picture. So next year, I do believe we're going to come down a fair bit, probably to these levels here, probably to that level there, or somewhere nearby. Here we have, let's have a look at the previous drop from the top to the bottom. It was around 56%. So what we're looking at is a scale chart. The scales can be seen off, but that's just by the nature of it. So if we do logarithmic, then it becomes easy to understand. So here we go with the log. So 54% matching 56%. So if we were to do this, 57% or so, it comes down to the Fibonacci's that we expect. So let's have a look at an assumption that this level is a golden ratio. If that's the golden ratio, we do have a number of targets. So golden ratio usually is an area of strong support, and we're just making that assumption. Therefore, this level will be our next target, the one for another bounce once we lose this 200 moving average and the golden ratio. And then we'll look at a strong support level here, and maybe the Fed will kick in and print more money because the crisis is too hard for the market. They don't want to kill the market. And then we have this level here. So 1.618, 1.414, that's one range that could find a reversal. And then I have this range because it's got confluence across there. And then what we need to keep an eye on is the wave. So what you see here is one wave, two waves, three waves, and then we go up. So if we look at history, historical waves, you can see you can do the alley wave count. You can say that's 1, 2, 3, 4, 5. Makes sense. So we are looking for that kind of correction in a bear market. We need to see the 5 alleyway count. So let's just do that. For those who don't know alleyway theory, you better look it up. 1, 2, 3, 4, 5. So 3 is not that far from 5, correct? So if we look at our current scenario, let's have a look at that. If we were to assume that this is wave 1 and 2, we're looking at wave 3, potentially 4, and wave 5 not far from behind. So I'm looking at that perspective once we lose this level. And if you look at history, and you can look at these other ones as well, they all pretty much tell the same story. We don't get much support of a rally here. And so if we look at that close up, using Fibonacci, you can see the rejection occurred on the 618 golden ratio from the 200 moving average. So it did it twice, 1, 2, and then it bounced high and then fizzled away. So it's 3 touches and then pretty much capitulated. Sorry about that. So in that essence, and then if you look at other areas, there's usually a neckline. Hold on for a sec. Yes, Layla. No, I'm working at the moment. Ring Fatim. Yeah, I'm. Yeah, because I'm working. I'm online, so I can't do it. Fit. Yeah, just call her. Yeah, I don't know. You need to speak to her. Okay. Sorry about that. So moving forward, I can't edit this because it's a live stream, so I can't do much about that private stuff. Looking at structure, looking at the cycles, you will understand that certain levels, once they're broken, we find a drop. And this scenario here of the banking crisis pretty much caused a lot of money to be, or a lot of debt became wiped out, and a lot of banks suffered for it, and the quantitative easing kicked in, which is pretty much the next bull run. So this was, if they left the markets alone, this would have been further down. And so what they did is just pretty much jump in. The government jumps in, not the government, the Fed as well, and just printed a lot of money. And so from 2008 or 9, ever since then, it's just been money printed, and the stock markets and low interest rates, and the rich got richer because of cheap loans and so on. Now that needs to be given back at some point, and that's why this is where it's coming in. Can the Fed kick in and quit? So can the Fed come in here? I think they want to see more pain based on what they've been saying. They want to see inflation reduced, and it hasn't. And they might come up with some bullshit numbers, and this might give us a bounce. Just pretty much like this. So what I'm looking at now is a fractal here, and that fractal here. So I'm going to just compare those two. So if the Fed decides to do something this week, this positive for the market, then we can expect a bounce and the golden ratio rejection, and then pretty much fizzle down. It's pretty much like this, that level. So what we had is our first touch at this level. Next one, that was prior to 200 moving at weekly. Now we are on it. So I do expect a bounce, but in some cases, the whales could just push it down and get a lot of them liquidated. And so I suppose this could be the short squeeze. So a lot of shorts kick in. I'm sure there's a lot of shorts coming down. The short squeeze, or the dip buyers get squeezed out, and this will be a nice area to buy. And then you can see that coming back up, and so on. So maybe this scenario could play out, or this scenario can play out on this level. So we don't know. That's the hard thing. But from a macro perspective, it's definitely going to go high. From macro perspective, it's definitely going to go down. That's my perspective for a number of reasons. Mass printing, energy prices. The only relief I can see in the short term is US elections, and they're going to try to steer the Fed to make sure that the market is good, looks good for the elections. But Saudi's pretty much stuffed them up with the oil policy of not producing much oil. Prices are going up, so I don't know what's going to happen, but this is going to be very confusing for the market, and it's probably the best time to stay out of it. That's my thinking. But long term, definitely coming down. There is no way out of it. And so with that correlation, this current scenario, we'll go into detail. So let's look on the 3-day chart. If you look on the 3-day chart, historically, like I said, we can look at this from a number of perspectives. Get our Fibonacci to that level, and the 0.5 pretty much, you can see there, the 0.5, if we bring it down here, close to the 0.618, but the 0.5 was the rejection. After the 0.5, with the second bounce, it's a 618, as you can see. So it might be a good opportunity to go long when we look at it from that perspective. So if we go across, very similar. If we do this, I have my range, the 0.5, this range here, and this orange represents the previous resistances here. So if this was to bounce back up, I'll be looking to short there. And why that correlates with Bitcoin, all currencies, that's probably a good spot to do. Now, looking at this from a big picture perspective, as a wave count, as you can see, I do believe this is a 1, 2, this macro picture here, 3, 4, that is probably close to 5. So we might get a bounce slightly higher than that for this short-term impulse, and we might just get our ABC correction. So that's A, B, C. C could be up to that level as well, and then we continue the next cycle of the count 1, 2, 3, 4, 5. So looking at the medium macro is probably the term I should have used, but this 5 could also, like I said, could be down here, and it's at a neckline right at the moment. So if we use this at the moment, 5, you can see where 5 comes into this level here that I have. So if we were to increase that, that is, so we lose that. Our 5 could be here, and then we just take that out. And then we see the ABC correction for the bear market, and then continue further down for the macro elite wave count. So that's how I see it at the moment. Now, looking at the other important indicator is the US dollar, which I think something like 50% of it is based on the euro. So let's go on to the 3-day chart, and I really need to hide certain things from this. Give me a sec. Where is that? Okay. Interesting. Okay, so what we have here is a 3-day chart and the 3-day bullish candle. You can see on the US dollar, it's approaching this resistance line. If you look at my previous charts, and maybe I should do that here. If you look at the big picture, it's an upward channel, and it's pretty much hit the top of the channel. And it's going to do one or two things, which is one, I'm shorting BTC. Should I close now or not? Wait. Okay, give me a sec, guys. You're shorting BTC. Well, it depends when you entered, right? So it's risky to short here because it is very close to the daily support. So this level, this is not an area you short. Unfortunately, it's not a trading method. What you can see is this band here. See this band here? This is a strong support level. Historically, that's what it shows. You can take your chances. It's more gambling. You need to take shorts at key, suppose, risk reward ratios. So the reward ratio here is risky. I do think it's going to come down here. I think it will come down a bit further to maybe 18,700, the way it's looking. I do think it's coming down, but it's not an area where you should have entered as a short. It's very late. You could pick some other coins. What we will want to do is look for something like this. It breaks down and then comes back. Then you look for the short. Or you see this move up here. So, yep, liquidity is there. A lot of resistance, as you can see. A lot of support and resistance. That would have been the perfect area to short. So that was the case. And these two candles pretty much said, okay, now the short. So you could have had a better entrance there at a higher value. Now we are coming back down to support, and we can pretty much go up to there and then down. However, there's a possibility that we can still go up and then come back down. So this area is smack bang in the middle, not a good place to short. If anything, you have a better chance of going long. Okay, going back to SP 500. Okay, so you've entered at 20,000. Oh, that's pretty good. Hold on, what are you saying? So my entry was at 20,985. Yeah, I would take some profit. Don't close it. Definitely not close it because you did a real good entry. So I'll definitely take profit. Take 20-30% profit, and then when you see something come up, then add to your short if there is a good scenario. Otherwise, if it comes down here, take some profit here to shorting, add some more shorts there, and so on. But no, you got a good entry, so I wouldn't close it. I would definitely look for taking some profit. But don't close it. Don't close it because you've got a good chance that it's going to come down here before it goes up. Anyway, hang on. I'll explain what's going to be happening in my mind in that space. So looking at the SP 500, it's very likely, in my opinion, that this will, well, 50% chance that it will go down or 50% chance that it will go up a little. And we'll be looking for a good shorting opportunity. If it comes to the 0.5, definitely a good opportunity to short. I'm convinced that that's wave 3 and 4. So wave 5 is slightly more down. It is lower, but this is also a good strong support. So it's risky to go. from a Bitcoin perspective, it's good to take some profit if you're shorting, because there's a likely chance that can bounce. But we've seen in the 3 days, everything was given back. Let's just have a quick look on the daily. Let's have a look. Looking bearish. There's nothing bullish at the moment. Yeah, I wouldn't. So if we go to the US dollar, where is it? We were going through it. So looking back to this, I'm jumping all over the place, so I want to stick to this. There's a good chance that this parabolic move on the 3-day chart, you can see that the 10 and 20 moving average, I believe this is what it is. Yep, 10 and 20 moving average ribbon. It's a perfect cradle method of trading. And I did say this was going to be a good spot to find support. And you know, that green candle, that is a bullish candle. Complete rejection to the downside. And we see movement to the upside. So it won't be long, I think, before we break this and then continue up. And I have a measured move based on this structure. So the structure is this here. So our structure is this. So a macro consolidation and then up. So our trend, so we had an uptrend, we had a sideways accumulation structure. If you don't know that, you can look at. I'll come to it. This structure is a reaccumulation, so it's likely that the first target is based on this, the height of this structure, which is there. That's what I got it. Once we hit that range 120, we might find they will come back down to this top of this structure for support. So there's a flight to the US dollar and then out. So all the other currencies like the British pound, it's getting mass printed for that that event that they lost a lot of value. The euro is no different. This is going to wreck all the other fiats, and everyone's going to be going to the US dollar, and this is just going to continue on. And you've seen in the past it's done that. So if we look at in the past, this level was a 3-year range, no, 2-year range, close to 2 years, 668 days, where we had a bearish divergence accumulate. So we saw that. It took 2 years, nearly 2 years to drop. So this level is going to be a strong resistance, potentially. But I do see this coming up and then coming down. And this might be an area where, in this case, it's probably a bad scenario where we still go up more. So we're going to keep an eye on that. And when to go bearish on the US dollar, when it breaks this moving average. So if it breaks the 10 and the 20 moving average on the 3-day, as well as this RSI level dropping. So if this was to drop, then we could go bearish. And that's probably the next cycle for the bull market. But too early at the moment. And probably we're here for another year and a bit. So this is being a strong dollar. And looking up close. Let's look it up close. There we have it. And I'll just chuck that parallel in. Hold on, give me a sec. Where are we? Actually, that was it there, wasn't it? So I have this uptrend channel. And, geez, that looks strong. And yeah, I think it might actually, we'll see. But it does look strong. Candle, so if you look at that, strong resistance level. Like I said, that's the Fibonacci level of a macro Fibonacci level. So that's where it's holding it back. If we go to the weekly, You can see my fib chart. So this 0.88886 fib is holding it back, or the 1.618 from this fib extension. So it is finding, and this as well, so this channel. So that's going to take a while to break through, but it might be very soon. Looking at from that perspective and looking at the others, you can see how it's going to be difficult to know when. But if this level gets broken, you can rest assured that this is going to go down too quick. That means money from the stock market's going into the dollar. Pretty much it. Now let's look at Bitcoin, and I'm going to give you, if those who haven't seen it, the top for the US dollar now. So if they think this is the top for the US dollar, I can understand that there's resistance. Definitely there's resistance, but at the moment, on the daily, we don't see anything yet. It's likely to be a range. So my thinking is, like, let's just do this for a sec. Let me get a chart for the US dollar. A clean one so you don't get mixed up. Here we go. So if we look at this chart without the fibs, you can say, okay, structure. This is a very classical Wyckoff recontinuation accumulation structure. Really, really nice. I haven't seen much of this, but this is really classical. So we have two heights. One's that. We can get that and apply it from the breakout, and the other one, and grab that, and we can apply it from here. So in both cases, so this one's pretty much is invalid, and this one here, even if we bring it down to this, could, but it's not realistic. This is the level that I break out of. The other aspect, so let's go to the weekly. We can do this as well, Fibonacci, and it's broken the 1.618, so it's acting as support. And the fib extension, let's try that one, from there to there to there, 786. Let's just see what, yep. Just want to do something else with the non-log. It just shows you that we've got much to go. And actually this is probably down here, so let's just do that there. So yeah, I still see it going up higher. The other aspect, so we only got a trend line that's really holding it back. So this trend line is realistically the potential one that holds it back. If I get rid of the log, it's probably better. There we go. That's pretty much what held it back, includes the Fibonacci. But I don't think this is enough. But it might be. That's why I'm thinking this is going to be consolidation before we break up, or we just stay in this range for some time. But the climate is not the same as that. It's actually worse than that. So 2008, where's that? That's down here. So that had no effect. And the last part, so I'm expecting, so this is a strong resistance level, but it's not the top. I reckon the top is slightly to that range here. We've got that. We've got a number of levels of support. That's a strong support. So I can't see how that's going to go below that. And what we're seeing is closely lined up. candle, the candlesticks pretty much tell you the story at the moment. 3 days of strong support. That is upward momentum. So we might just retouch the top, might get a double top, and still go sideways for a while. But we have that moving average. So, like I said, it's not the top until we see this break, at least the 10 moving average break. Now, if we look at, let me just add the MACD. Let's see. So what kind of bearish divergence is there? So this is, what's the word? It's not divergent at all. There is no bearish divergence, not here. So this is convergent to the trend. There's nothing bearish about it. Nothing. Too early to say it's the top. That was a bearish divergence, and that played out there. But so if this was to come down, I'm pretty confident. So you might hit this top level again, come back down, and find support with the 10-20 moving average, and then just continue for some time. So it's not the top yet. Hopefully that makes sense. So looking at Bitcoin, where are we? So I've got a few things here with Bitcoin. And actually what I'll do, I'll bring out to the chart that I had before. Okay, this one here. You can see this chart, and I've explained it a few times. This level is very important for Bitcoin, and at the moment, so this is a 1 week chart, and it's right on it. And in the past, if you look at my previous video post, I'm looking at it from this perspective here. We are very close to doing that, and the climate is very similar. A lot of people were bullish. They thought that this was going to go up. And if you look at the RSI at the time, 50-50, didn't know. That could have easily gone up because they'll keep buying the dip. But the bulls pretty much ran out buying the dip. Every time buying it, and then it dropped. Now, the climate, I don't know what the climate was back then in 2018. For whatever reason it dropped, but it was an 80% drop. So let's look at that from the top to the bottom, 83%. If we use that principle, we only done 72. You can see 79, 85 or 86 really comes down to this level here, around the 10K range. And I said that every time from the historical perspective, once we drop a particular fib level, the next one down is the major level. It's always the next major level. So what we had here is we dropped this major level, it capitulated to the next major level, and it's likely, if we drop this, we are likely to come down to this major level of 10K. But I do see this level here, about 14K or so, potentially being an area at the moment to come in. So from 13, 14K to 16K, because where the fib levels are here as well, that is, we have a number of regions where there will be support. Here we saw the reason why it came in support, this area, plus the previous all-time high. And if this doesn't hold, it's going to come down hard to this level here, which aligns well to previous. So it does align very close to this area of previous support. So looking at this perspective, this chart, people are making judgments based on the RSI, saying oversold conditions. You know what? RSI just easily can come back down. It doesn't mean shit. It's just showing what's taken place. You can't use this as a trading strategy. You need to incorporate all the others. So I'm looking at this from an RSI perspective is wrong. This could come down and then back up. Come back down, touch this, most likely to find support. So let's have a look at that. And so this RSI is likely to, in my opinion, touch this and then go back up. And then we get our bullish divergence. Yep. So that will be our bullish divergence. And it's very possible that when it comes down, in my opinion, that will match that level here. And we'll get the bullish divergence. Now, would that mean it's the bottom of the market? Hard to say, because we can just keep coming down more to this level and then long-term wise up. Does that fit any scenario? Maybe. Could be a channel or descending wedge of some sort. But I do see, here's the 3 sigma rule, guys. If you haven't known it, I've done it here. Here we go. That's our 1. Okay, that's not doing it. So what I'll do is, that's our 1. That's our 2. That's our 3. Then we have our A, B, C. This is the 3 sigma rule. So what we have is our 1. We're looking for our 2. Our 2 might be here. A 3 might be here. Or a 3 might be from this perspective up. So this could be our 2. This could be our 3. And then we have our A, B, C, and then up. So I am looking at this cycle. So that's A, B, no, sorry, the other way around. That's our A, B, and our C. And that's what I'm looking at from that perspective. See, the climate just tells us that we're going to be bearish for a while. And this definitely is an opportunity to buy the dip. And it might just come up a bit more and then come back down again. So that is a lesson learned from here. And what we can have for the short term is a level on RSI. And let's get rid of that circle. So what's likely to happen if you look at the RSI perspective compared to that is that we have 1, 2, 3, 4 levels. So we might just come down like this, go sideways before we drop. Or we just drop quickly, then down. So we could still be here for a while, and we'll need to find probably a pivot point. What is a good pivot point? That could be a pivot. Yep, so if we come on and touch that line again, that could be a pivot to come down further. But I would not, the reason why I won't be shorting anytime soon is there's no setup. I'll be looking for a nice bounce for a shorting opportunity. Otherwise, I will not short it. I'm mostly in cash anyway. So the 0.382 is a nice area. It's like you've seen the rejections, and this is a weekly, 2 rejections, and now we need to find support, and we need to see a wick on the weekly to push it up, and that correlates to the dollar as well as I'm just looking at the comments. Western Sydney representative, okay. I'm from Melbourne. So anyway, you recognize the accent. So looking at this is definitely, there's a number of models that can fit this. We also have this model, this trend line that's acting as resistance at the moment. So let's have a closer look at that. If you want to know a bit more closer micro trading at the moment, let's have a look. Let's look at the 4 hour. Oh, look at that. That looks crap. Here you go. So we've lost, guys. I don't really care about the trading at the moment, but that level is just pretty much given up. That was not. That would have been a nice entry when it came back up on the 4 hour. Wasn't paying attention. So there you go. That would have been a good trading opportunity to short. So let it come. So it's come down here. You can see it pretty clearly. Let's do a Fibonacci on that, guys. Double top, very good. I did talk about that there will be a double top potential trade, and it worked out. And let's see where the confluence is. So that's our previous bottom. Doesn't quite match, so maybe there. Okay, so we lost the 618. This is going to keep coming down, guys. So that can, yeah. So look for maybe for small trade with high leverage down here, and then we could see this might be enough. Seriously, this might be enough to go break through it and then come down like that. So yeah, this might be the last chance. So I would imagine, let me see the Nasdaq. Nasdaq's dropping as well. Here we go. Nasdaq is looking crap. Very similar to the SP 500, but the Nasdaq, as you know, is the technology space and risk on space, and it looks bearish. So let's get rid of that. Cool. Like I said, small time frame sometimes is the best thing to do. BNB, okay, here we go. So it's broken that trend line. So they're all dots done it as well. So my dot is further down here. Anyway, it's up to you guys if you want to trade it, but here dot hasn't quite lost that trend line yet. I'm looking for dot down here. I'll cover a few coins if you want me to. Lots of downward pressure, yes, definitely. Link is looking good, and we can talk about this. This is my shopping list. Not all of it, but that is my shopping list. Ignore some of the dollars or the currencies, but the cryptos, this definitely is my shopping list. And those who follow me, that was my vet perspective. At the moment, I'm looking for lower levels to buy. Yeah, so that's what I got currently. Now let's look at the total market cap. And this is the alt total market cap. And what I've said in the group is that historically, when we've seen in the bear market, the reversal, there was no second touch. It just went up. The alts just went up in the dominant space. So we might be, so if we look at this space, and you can see the count, really. It makes sense, right? You might say that's 1, 2, 3, 4, 5. You want to see a complete 5-wave count on the bigger picture. This is a 5-day chart. Now, I'm saying that's 1, 2, 3, 4. That could be 5, right? Yes, I have a few lines that I'm just exploring. I'm not saying this is what it is. I just want to see if it makes sense. But I do see, when I look at this perspective with the daily wave count, so let's just get rid of these lines so it doesn't distract us. If this was the bottom for the alts, historically it bounced and didn't, it just went up here as well. It just went up. So why? So we went up, and why is it revisiting? None of these revisited to this. So this would have revisited, and this could have revisited as well. So to me, the alts have further to go. And when I do the macro Fibonacci, our 618 is there, and that 618 lines perfectly to this level, and that was previous resistance. So at least this will be where you start going, okay, the alts in the market could probably start looking bullish here. Here we had the, so from a fib extension perspective like that, we hit the 414, but we did not hit the 1.618. So it makes sense to me that this is about to break down. So let's have a look. There is a slight chance that it's delayed and we get that bounce, right? Or we capitulate and we come down here. We might get another bounce there. Can we get a double W bounce? Maybe. Double bottom. But we can definitely get a bounce there. So the alts, it's a hard area to trade, really. So you keep the bigger picture in mind. Look at the total market cap. I think, let's see what we got. Got total market cap here? No, not there. Let's have a look at the total market cap. My son's just whinging. Okay, this is the total market cap. This structure, and I've used it before, and I'll bring it out. Give me a sec, guys, while I look for it. Let's see. Yeah, to me, this. So we're looking at a total market cap here, and what we have, and if you use the RSI in the right way, you can see how that's pretty much gone negative, right? And all right, let's just adjust this line, give it a bit or so, but it's one of these versions. Right angle broadening formation. It does not look like an Elliott wave bottoming, no way near. So if you're familiar with Elliott wave accumulation, oh, here's one. Does that look like an Elliott wave accumulation? No. It looks like a big macro continuation pattern to the downside. So when I look at that, this is a total market cap, by the way. I'm thinking this is what's taking place right here. And here's the distribution from an Elliott wave perspective. And so a measured move to me is this area here. Hold on for a sec, guys. The wife's dumped the little one. Ismail, come here, come here, come here, come here. No, that one. Oh, my little man. Oh, my little man. Sorry, guys. I don't know what my wife's doing. She has to pick up. Oh, now I know. She's got to pick up the other one. All right. You know what? Give me 5 minutes, and I'll come back and continue on this story. All right. So I'm just going to leave it as it is, and I'll come back. And in the meantime, if you've got any questions about any coins, we'll come to them. All right, I'm back. So where was I? Right. So looking from number perspectives, we are bearish still, and trading opportunities are pretty much limited to shorts. Looking for entries. Like I said, this is likely to drop further down. Let's have a look at this. Okay, I've had something there in the past. Let's look at this. For those, this makes a lot of sense. If you haven't seen this presentation before, what I'll do is I'll just go back. So what I did was, let's see where we are. So if the previous presentation, and look at it, I pretty much looked at this from a macro channel. This is smack bang in the middle of it. We lose that level. We subdivide these channels into two, and you can see the confluence of support, all major pivot points, and then I just apply Fibonacci to it, and everything makes sense. So when you look at it from that perspective, there's no argument that it makes sense. In terms of this formation, it is a bearish formation. However, there is always that possibility that it can go up. So if it was a bottom, then we might do this or this, just a little bounce. So we've got a few scenarios. This is the bullish version where you have a bit of a rise. So we can probably go up to a point and then back down. But I don't see that happening with the US dollar. SP 500 seems to look like it's going to jump, but those areas need to, these areas need to show strength. We need to see strength, and it's not happening at the moment. So if anything, when we see weakness, crypto will show more weakness in magnitude. So I'm looking at this kind of scenario where eventually, right there, where we drop. And if you haven't seen that area, let's have a quick look, and I'll explain the scenario. So this is our weekly. I'll pick a 3-day chart, and what we can do is quickly go over it if you haven't seen this, and I'll align it with where we are now. So I'll just put it in the corner if I can. If it fits, here we go. Let's get rid of that for a sec. Lower highs. The first bounce, let's just go there. Align it to the top. It's a golden ratio rejection, right? So we had our first bottom. The second bottom, we had from that to that, the golden ratio. Again, let's just have a quick look, closer look. Golden ratio again from the second bottom. And then what we did is exhaustion, third touch. It took a while here, didn't it? Fourth touch, so it's very unusual. But and even the fifth, far out. So what we have is each time, in this case, golden ratio again, acting as resistance, and then eventually, even the micro one, golden ratio, resistance, and I get interrupted again, far out. Yeah. didn't tell me, but here it is. I don't know if she's finished. She didn't tell me anything. She's not finished. Can I check this? She's not finished. You come a bit early? Can you come back in a short time? She'll be back.
I think I can take this one already.
Hold on. There's some paper here. I don't know. Yeah, so. Well, there's a second box here, but I don't know what she's done. She's not finished.
What is I can come back again?
That's what I'm saying. Can you come back in short time? Yeah. She just went out for a sec. So I don't know what she's done. Yeah? I'm not sure. Thank you. Start. Right, far out. So we can see from this degradation that it's taken a while to find weakness in the market, and because this was a strong support area. So obviously this level here is fundamental, and it just takes a long time to exhaust itself. So let's look at this. How long did it take from the first time it touched? 140 days. Close to 140 days for it to drop. And if you look at that scenario, here's our first touch. This is only one of many theories, right? Second touch was pretty clear right there. Third touch. Third touch is, whoops. Third touch is there. So we're looking for fourth touch, and you can see the fourth touch. This is actually a bit more strong, but as you can see in the past, it still went sideways for a while. How long did it go from the third touch? 54 days before it dropped. So far, 140 days. So you know what? It almost equals that trend line resistance, doesn't it? So we can see when we look at the Fibonacci perspective, very similar. Okay, let me just close this door. You can see the 0.5 acted as a resistance here, so it's not on the 618. And this trend line, so we're probably more bearish. And you can see this macro areas acting as a support. So it's likely to come down, very similar to, I do see it coming down to 18,500, maybe even lower to 300, 18,300, and then get the wick. And then we still go sideways. It's possible. So we've got the 1, 2, 3, fourth touch. The fifth touch is going to be our drop. So that's going to be our fourth support level. I can't see it really going high. I still see it coming back up to potentially the 20,200 and then coming back down. So even if the SP 500 goes up, I still see this coming. So I can see this coming up and down. I don't see this correlating strong with this move. If this was to go up, I don't see it going up very much. And if it does, it's going to go up slowly. And I don't think the SP 500, the Bitcoin's going to go up any stronger. So you see these moves compared to SP 500. These were two strong moves in 2 days, and then the drop. With this, 3 days, they're not that strong moves, and they're 2 days of dropping. So these moves aren't that strong. It's more of a grind, and the 4 hourly chart shows you that it's a grind, and then we got it. So macro wise, where are we? From a trading strategy, I want to talk about my trading strategy. We counted the 4 touches from that perspective, but realistically, from a breakout trading strategy, we can say that. Oops. We can say that that's a 3rd touch, and we're looking for the 4th touch. So it fits into my breakout strategy as well. If this was to come down, even if it doesn't, it's still likely to find this as a resistance somewhere. Small term, this could be a good entry, and then a reversal. Like, we need to see a reversal candle, but we can see potentially a small trade to the upside from this level, and then come back down to this level, which will make it our 4th touch. And then I'll see the next one even worse, and that could be, so if we look at it from that perspective, do we have anything there? Maybe it might be able to go up to that level there. That would be a nice smack bang there. That would be a good short entry, but we need to see reversal candles of some sort in the next following hours. RSI is definitely overextended in the range where there could be a reversal. Probably could come down a bit more. So if it doesn't hold this level, like you see, it's coming down to this level here, which is, and then I'll look for going long. Going for long, make sure you look at what the other charts are doing at the time, and then this is a small trade. That's what I'm looking for. High leverage, small trade, and then come back down, and that'll be the nice position there. Lot of resistance, support. So this level here is confluent for a nice short entry if it gets to that level. Otherwise, that's it, guys, for that Bitcoin. BNB. So now what I'm going to do is look at Nasdaq again, just to make sure. What's GMX on? Okay. All right, let's look at Ethereum. I did think this was the bottom for Ethereum, but now I think I've changed my mind, and I'm looking at it from this perspective, that this is another sidewards formation, and this is wave 3 to 4, in my opinion, and wave 5 could be a double bottom, but I think wave 5 will come down to this level. This level makes sense to me. 700 to 850, somewhere there is a good range to enter. Squeeze out those longs, come down a bit further, and that it's got confluence for this bottom type of channel. So you can see this top structure, macro upward trend. Halfway was resistance, and it's acting as a resistance now. If you look at it from that perspective, see how we got this line. The middle of that, you can see it's finding resistance. Also, this as a previous support. So it's likely to come down. Could find some support here, like Bitcoin does. So it's likely to come down here, find a bit of a bounce, and then drop. That's my thinking. Like Bitcoin, I'm thinking it's going to drop. This is my area of entry. Definitely entry there. Then I'll see that reversal. If this is the reversal, if this is the bottom, then we adjust a Fibonacci accordingly. something like that. And then we'll look out for the 0.382 here to potentially be our first line of resistance. 0.5 is definitely a resistance that we might get to, and that's the top of that middle channel. And then we have your correction, ABC type of thing. And we might just do a double bottom or further, come down further down to this level here, the 400s, 500 range, very possible, and up it goes. So I'm looking at it from that perspective. Previous bottoms, you can see how Ethereum dropped a lot, found a bounce. So what it's done is this. So wave 5 count, then we did our A, B, and C. Ideally, this is the COVID event, so ideally this should have continued up. But the COVID Black Swan event just messed it up a bit. However, we can also look at it from this perspective. If that's our move, we can also say that's our A, B, C as well. So we might have that potential move. So wherever it is there, where are we? Don't lose that. If it moves to there, then we can have our A, B, C, and then up again. So that is a scenario that I'm looking at. But you can see why I'm selecting this bottom range. These trend lines make a lot of sense, and therefore I'm looking for good entries. Even if we don't get it right, it's planning and then tracking at least our risk to rewards ratio. If I get it right, if you enter here, that's 1,200 versus 800 and so, you're going to get more Ethereum. So even if it drops further, you still got a good entry, but it's going to be pretty evident that this is likely to be a strong support level. Based on that, you go across. The 0.618 is here for the Ethereum. Will it make it down there? At the moment, this is the 0.5. So from a macro Ethereum Fibonacci perspective, I got my 0 and I got my 1.414 up there. The 0.5 is here, which is confluent to that level. The 0.618 is possible. I'm not saying it's going to do it, and if it is, it's probably going to be this channel line. Yep. So that is looking at crypto as bearish as it can. We don't have enough pain here. There's no pain. Same with Bitcoin. Here, there's too much hope. We need to see everyone lose hope for it to be the bottom of the market. And this is just too much optimism. Not enough fear in the market. And I've gone through two events since 2015 when I joined in. And we want to see pain. I remember when we were here, people were calling 1,000 down here. This is all 2,000. This is how bearish people were looking at it. I'm looking at bearish and I'm calling this level bear, So people had a much more bearish view, and then they call this manipulation when it went up. No, Fibonacci does a lot. So if we do something for you guys, here's a good lesson to learn. Let's pick another chart. That's probably not going to be the one. Let's pick a new chart. Fibonacci does everything, right? If you don't learn the lessons from the past, you're not going to make the right choices. 0, 1 there. You can see the 1.414 acted as a perfect resistance, major profit taking. And you can see the 1.618, perfect major pullback. And then this was another level, and I can explain it later on. Similarly, on the way down, if you look at these ones here, from this bottom to the top, And if I flip it off non-log, you can see it's a golden ratio. Golden ratio, major fib levels, they'll always happen. So we want to use Fibonacci in our TA and look for entrances. So what we have now is, if we will make this assumption that this top, let's just do this for a sec. There's a lot of confluence, and this is what's amazing about Bitcoin. From there, actually, go back a sec. Let me do this right. Actually, it's probably further down. Here we go. Let me just put that on. Now you'll see this. Just play with your Fibonacci and you'll see a lot of things come out. 0, 1. Macro wise, that was the 1.414. And macro wise, 1.618. Yep, we're on the 1.414 right now. Potentially we can drop down to there. That is very possible. If we do that from that perspective all the way down to the 1, the golden ratio is a key level. Yep, that area, that's a key level. And then when we apply the other stuff that I showed you, when we do this stuff, actually that's one way of doing it. This is another perspective. You can see this could be the bottom of the channel. If we lose that, that could be the bottom of the channel as well. That's another perspective. And the other one I had, well, let's do it from the, let's see how I did it. Actually, I did it this way, didn't I? No, I didn't do it that way. What did I do? I did that. And give me a sec. I did it from that perspective. Hold on. Yeah, I did it from that perspective. Keep forgetting. Yep. So I did from that bottom to that top. And then we add our Fibonacci to it. I'll do this Fibonacci thing because this channel, because it helps us put the Fibonacci perfectly into it. Yeah, I did the wrong way. Just got the top down. Just get the parallel. And see the 618 could be further just there as well for a bit of a support for the bounce. So you can look at the charts in many ways that make sense. And if I was to drag this all the way across, give or take a bit, so I can just fix that up a bit. You can see this is going to be a major resistance, this area here. So looking, it's very hard to know which perspective to look, but that level 0.382 is a strong resistance at this point. Once we lost that, and once we drop below, now this is going to be very strong resistance, and therefore we're going to go down as well. So you can see how many times, no matter how I slice and dice it, a lot of the charts make sense. So Ethereum, we've done. Looking from the bearish perspective, I do see this channel, it's just a line in the sand. The bottom levels are making sense with the top. This just pokes its head out. I just ignore it. And I see this coming down further. Weekly supports. We lose this weekly support. The next weekly support is down there. And the weekly support is done by the weekly chart. All right, weekly levels. They're all weekly levels, and the Fibonacci is confluent with it. So that's VET. I'm pretty interested in VET long term. And GMX, I'm definitely into GMX. I see this broadening structure. This put a spanner in the works, and that was the Binance and FTX listing. So that just really stuffed my plans up. I was looking for the daily support level to buy or average in, and these are my targets. But now I've got to really look at this again. It's sort of all over the place. This is the best chart I can get for GMX. Let's look at BNB. BNB is another coin that we should get, in my opinion. When you look at how it performed against Bitcoin, it's still pretty strong. So BNB didn't break the top structure, really. This is what's impressive. And I don't get it. I don't understand why it didn't break it at all. Where are we? Here and there. So we have a number of structures for the top, but it did not lose this neckline. It lost it a bit, but it's still strong. So this could potentially be a continuation pattern. This is what's doing my head in. This structure did not break this neckline. It went back up. It's not dropping, although from a long perspective, you can see that from 800 or 600 and something. Okay, 600. It's come down a fair bit to 200. That was a big drop. But this macro structure is not bearish. If it comes down to this level, I'll definitely buy it. I think it will go up. If it breaks this level, then I'll have my stop losses. And this is the next level. And then it could capitulate, really. So that could be the main target. I can't see it coming down this level at all. This was an old chart. It's holding up well. That's what I'm saying. BNB is holding up well. And if we look at BNB from a Bitcoin perspective, it just looks good. So this is a daily. Let's look at the weekly. Yeah, it's just going up against Bitcoin, isn't it? So if we were to enable these wave counts, no, it doesn't quite give us. Let's look at the 5-day. So look at that. So this structure, it broke out of that structure and it kept going. So that was a continuation structure. There's no reason why this can't keep going. We add our 10 hourly wave count. Moving average. So this broke this continuation reaccumulation structure. So that's what it is. Now, from an hourly wave perspective, I'm not sure what it's doing. I think it's still looking for wave 5. And it is bearish indications at the moment, but not much. So the MACD, look at that. MACD's almost turned over. Bullish Divergence, yes. Downward pressure now, for sure. Definitely downward pressure. Let's see if it's hit its target. If I use this, let's see if that's the target. So if I use the body of the candles, let's see how we go. So it hit the 1.414. Definitely bearish divergence there. And this could be an ascending wedge or rising wedge. So you got to be careful, guys. This might be the target eventually, but from a Bitcoin pairing perspective, could go there and then come back down, and that's on the top. So the bear market starts for Bitcoin or Binance coin. So there are definitely bearish tones there. Yeah, they're bearish divergence. So this could go down pretty quick. So if you're on Binance or BNB, it's probably better to go into Bitcoin at the moment. But from the dollar perspective, I do see it coming down. But that would be my area of interest with a double bottom. This neckline is still looking strong. So looking at this, yep, downward pressure, not too much. So that'll be my area of interest to go and start averaging in. Right, that's what I got there. Optimism. It's a long-term coin. My level of interest is down to the 68 cents level. And I've explained why many times before. Just the top of this range, really. And then if it drops further down, then I look at the 40 further down to the middle. So somewhere in the middle, around there. That is what I'm looking for to average in. And XRP, I think it's done. Matic is one of my coins that I want to get. Very difficult to work out if it's still going to break this level. I think it will come down, but this level of interest for me, Matic's performed very well, as you know, with all the other Ethereum affiliated coins. And so what I have is Optimism, and Ethereum, Matic, Chainlink. Yep. Actually, let's look at this one here for a sec. Moonbeam. Oh, sorry, that's not Moonbeam. That one is. I still feel like this is close. I average in here. I think it might come down a bit more. Still interested in that. Gone details for that one as well. Let's see. There you go. Resistance, double top, coming back down. This area is strong support, as you can see, very similar to Bitcoin. And it's still worth averaging in here, I think, with the possibility that it goes up a bit. However, I'll be looking to increase so put a little bit in, and as it drops more, put more and more in. And I think wave 5 is down here, somewhere down there, 1.414, 1.618, possibly to 20 cents in the range. But that's what I have at the moment. I'm just going to look at if there's any questions. I'll see the YouTube, see if there's any on YouTube. Any questions? I'll see YouTube. No questions on YouTube. So I'm just looking at the time. It's been a while. Just to recap, let's have a quick look. No, let's do this. See what else I got here. So Bitcoin at the moment. Still looking bearish, doesn't it? Okay, so that line this seems to be holding it. Okay, don't know where I got that line from. I think I'll wrap it up, guys. That's about it. Otherwise, I'll just keep going on. I'm going to leave it at that, and please give me a like and share, and I'll talk to you soon. Cheers.